Good day, traders. Stacey Burke from Stacey Burke Trading. Today, looking at the day 3 reversal trade. A lot of questions from traders, emails, and comments regarding why this was a long trade in the Europe window. So, coming back to looking at some basic things. Going back to the 1-hour charts, we are in a downward market. We had last Thursday's day 1. We had payrolls on Friday. We had the creeping trend back into the breakout of day 1. So I talked about trap volume. Wherever there's trap volume is caught above the previous day's high. So they take out the high. We'll just change this to a line box. They take out the high. I'll make this a bit darker so people can see it. And that's where I start my countdown. A peak formation high of the week. And we had day 1 on the Tuesday, day 2 on Wednesday, which was the Fed day. And again, we talked about the news catalyst, lifting that up. Day 3, peak formation. We won't go into the low of the day. We talked about that in the last video. But day 1, day 2, start the new week on the pink line. That's Monday, day 3 down. But we start our new week as well. Monday, Tuesday, Wednesday. And yesterday was 3 peaks into the previous day's breakout low. You'll notice those lines project across. We had 3 pushes up. They did not take out the previous day's low. They went up and made a high of the day, pushed into it 3 times, and in the US session sold off straight down through the low of the day. Today they go down and trigger the low of the day and reverse and go sideways. We saw an example of this similar on payrolls Friday, except that this was day 2. They break the low. That triggers other time frame traders into the market. But when they reverse like that, these shorts are trapped. So if somebody's sold that on a longer time frame, okay, and I'm using the 1-hour charts to form my thesis for each day. I'm not trading on the 1-hour charts, but these shorts are trapped. They come back into them. This is 3 pushes. 1 push, 2 push, 3 pushes. Shorts are trapped for the explosive move back up. That's a stop hunt into lower level shorts. And in this particular case on payrolls Friday, we had 3 highs. Payrolls was the second reversal down. The pin became our high. 3 pushes up, 1, 2, 3. Dropped it down sideways into Monday morning. They'd engulf the high in the third leg for the continuation of the move down. Now, I start my week off. This is day 3, but we continue to go lower. And Monday's day 1. Day 1 pulls back, 3 pushes. Day 2 goes down. This morning we reverse out of the low. Again, shorts are trapped. And they also moved it in the pre-market. So this is an example of the Asian rollover trade where they pump and dump into the beginning of the day, second hour, into the third hour. This triggers shorts into the market before the Asian 3-hour window even starts. They form a rounding bottom, and we'll just zoom in on this for people who they keep asking what a peak formation is. A peak formation, okay, any of these are peak formations. Peak formation low, peak formation high. They go down this morning. I said, whenever you see a pin in the first hour, draw that line across. Draw your line. If they go through that line and keep going, you're going to get another pin at some point. Draw your line on the pin. First hour goes down and puts a pin there. That's the low. How do we know? I don't know yet, but that's the low, and then they go down and they lock in the low, and then they push back into the low, but we also have a consolidation down, 75 pips down, and a consolidation. They went straight down and consolidated the market into the second hour. Second hour is this big vertical candle, and then look, 1 push, 2 push, 3 push, and they come out of the bottom. It's as simple as that. 75 pip drop. Level 3, level 2, level 1 into consolidation and the reversal. Level 2 is where the straightaway comes out of. Okay, that's the straightaway, the vertical move. That's the trades I'm looking for. The coil, the explosive move is level 2. They come back up and they go up in 3 pushes. 1 push, 2 push, and 3 pushes. Put in a peak formation just underneath the high of the day. And again, I'm going to emphasize, whenever they come out of level 2, whenever a market starts to go, do not counter trend that market. And also, when a market is done this window, anything can happen in this gap time. algos are going to work. If you're going to keep trading all of these different swings, understand this. It's going to set up again into the next 12 candle window. This is the textbook setup. The consolidation underneath the high of the day after the low of the day has been locked in at this point of the day. Consolidation, level 2. They've gone into level 3 from the original level, 75 pips. Now, if this is going to go long, guess what it's going to do? 75 pips is our high and low of the day. If this market is going to go into consolidation without taking out the high before the next session, it is coiling. They lock in the low at 50%. They go sideways and they go down into these peak formations. And then they form a 3-push pattern in the first 8 minutes. Why is 8 minutes significant? Because 8 minutes, 7.5 minutes is halfway of a 15-minute bar. If this market gives me an entry, the engulfment candle of this lower rectangle 3-push pattern, this is either going to be a pin hammer for an explosive move or an engulfment, a 15-minute bullish engulfment of a bear candle for the explosive move. When they have not taken out the high and this market's coiling, whenever a market does not take out the high and it consolidates sideways underneath of it or on top of it, if it's going down, it is going to explode. This market was coiled for a reversal, and the green box that I have on here, if we just remove that, you'll notice last night they went vertically straight through the low of the day. That's a breakout. Then they made lower highs. They have not come back to that breakout trader yet. So if there's end-of-day traders from the northern hemisphere that traded the break of the low, they were in the money. They had a slight pullbacks on the 1 minute, but they're in the money all the way until this move comes back. You'll notice after the explosive move, when they come out of this trade, they go vertical into that box right away. Why is that? Because they're going after the money as fast as possible. If those traders haven't locked in profits, they went straight up and got them. Okay? They're in the money. They go vertical super fast. This was an explosive market to get the money. These traders are in the money. These traders who are lower level shorts from last night, my time last night, but U.S. session, late afternoon U.S. session. And you'll notice, even though it's a 1 minute chart, this is a reverse head and shoulders type of situation. That's the neckline at double zeros. They coil it sideways for the explosive move. So people are saying, why did you buy at the high of the day? This is not the high of the day. This is the low of the session at this particular time. The low of the day is locked in. They're going to go up and hit stops. Well, in this case, yeah, they not only hit the stops, but they've exploded through because it's a day 3 reversal trade setup. So understand the psychology of this. Start paying attention to these breakout levels to notice if there are gaps that can be filled. They'd already trapped shorts. They went down in the pre-market and they opened the session down low. Traders were selling this down low. Why? Because they think the trend is down. This is going to go on a big move. Guess what? They come back inside. Dead giveaway. They're trapped now. Everybody's trapped. Everybody's trapped. Look at the closing price from last night. I'll adjust this line to the closing price. And we'll just move it up there. And then look at the engulfment candle for this entry. It closes just above that line. Okay, 1 bar stop. Measured move minimum of 75 pips. This market still has the potential to go another expansion of that range up towards 50. DNC. Do not counter trend. This could be an Asian low, London high, possibly a retest of the high in the U.S. session for a stop hunt down. But I would just leave this market now and come back later. This is easy money. This is a scalable trade setup. It will show up over and over again. But understand, day 3 down. They triggered the shorts. They reverse the market. They go into consolidation. That's a coil for an explosive move. Hopefully you got value out of today's video, traders. Put this trade in your playbook. It shows up on every single pair. Doesn't mean that day 3 is going to be a reversal, but we had more than 3 days down. They reversed it. They already reversed it. This is the trade over here. There were shorts this morning on the Asian rollover. There were longs coming out of the Asian consolidation. But this is the dead giveaway for the reversal explosive measured move. And when this goes, do not counter trend. Keep it simple. Put this in your playbook. Have a great trading session, and may the markets go with you.